Good evening. Hi everyone. Where are the rest of you? I hope I am audible and visible clearly. Hi. Am I visible and audible both clearly? Okay, great. Good. So, I see a lot of you are flowing in. Let's wait for one more minute and then we can start the class. How are you all doing today? Hi, 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 hello. I am very good. I'm doing very well. Um, Today we are going to be covering two chapters of accountancy. First, we have to take up the final accounts of sole proprietors. And once that is done, we will be discussing the financial statements of NPOs. Okay. So, non-profit organizations. The two things that we have to cover today, then we have rapid fire rounds for you, where we'll be discussing questions with you. Okay. Um, those rounds are always really fun. So I would expect all of you to participate and give me the right answers. Okay. Apart from that, let me remind you about two things. First of all, your exam is going to be subjective in nature, though we have questions of objective nature, but that is only for the purpose of your revision. You are not going to get something like that in your exams. You're not going to get options. Okay, so this is solely for the purpose of your revision. We do not have objective type of questions in CA foundation examinations. Okay, and apart from that, you can download these PPTs and the questions and answers. Okay, I will be taking the right answers for you. Okay, so everybody welcome. Let's start with the class. So the first mind map right in front of you is of the final accounts of sole proprietors. Then these are divided into two major heads. Those are your non-manufacturing entities and your manufacturing entities. Okay, then as you already know and you've heard it like 1,000 times, there is this income statement, and apart from the income statement you have the position statement. Income statement is your trading account and your profit and loss account, okay, right here. And under your position statement you have just one single statement, and that is called your balance sheet. Okay, so you are very well versed about these three things. You've done it quite a bit in class 11th and 12th, right? Then about the manufacturing entities, you have a very significant trading account. And apart from your trading account, you also have a manufacturing account, right? And wherein you must have studied about the manufacturing cost, the designing, and the byproducts, how exactly they are to be dealt with. Then under the manufacturing entities, you have the profit and loss account and the balance sheet also, just like a non-manufacturing entity. Okay, so this was it. Let me see if I would want to highlight anything more to you. Yes, apart from all the basic detail that I just took up with you, you also have to read very well about the accounting cycle. And apart from the accounting cycle, you have to know the limitations of the statements also. These are some things that you can write on your own also. So you, if you have the idea about what are the limitations of these statements, you can briefly write about them. This is not something that you have to mug up, but you just need to know about them. Okay, all right. So before I take you to the financial statements of NPOs, let's first do the questions relating to the sole proprietors. Okay. So let's start with question number one. And as always, I will expect your participation. Okay. Okay. So we have question number 1 here. Let's see who gives me the right answer first. Which of the following alternatives represent prime cost of a manufacturing unit? A. Raw material consumed plus direct manufacturing wages plus direct manufacturing overheads. B. Direct manufacturing wages plus direct manufacturing overheads plus direct manufacturing expenses. C. Raw material consumed plus direct manufacturing wages plus direct manufacturing expenses. Or D. None of the above. So yeah, I think Trishna gave me the right answer. She was the first one to answer here. And then I have all of you. Right, absolutely correct. I see everybody's giving me the right answer here. The correct answer is raw materials consumed plus direct manufacturing wages and the direct manufacturing expenses. So C is the right option here. Okay, well done, everybody. Taking you to the next slide. Do not forget to download these PPTs, okay, for your revision. Yes, yes, a lot of you were right. Good, well done. Okay, current assets except closing stock are also known as A, circulating assets, B, fictitious assets, C, floating assets, or D, quick assets. This one is very simple. Let me see who gives me the right answer. D, yes. Rati. Mr. Rati has given me the right answer. I do not know how to pronounce your first name. Quick assets is the right answer here. Well done. This was a little confusing one. Yeah, D is the right answer. Current assets, when you exclude closing stock from it, it becomes your quick assets. Why? Because closing stock is something that you cannot sell easily. It takes time. It takes time of some months. So that is why closing stock is not covered under quick assets. Okay? Can we move on to the next one? Is it crystal clear? Yeah. Bharat, okay, I get it. I get it now. Okay, question number 3. Opening stock of raw material. Quickly calculate the things for me. Okay, opening stock of raw material is 17,000. Closing stock of raw material is 12,000. Raw material purchased is 90,000. Expenses incurred on procurement of raw material is 5,000. And other manufacturing overheads are 8,000. Now, what you have to do is you have to ascertain the cost of raw material consumed. D, I see Vaishnavi giving me the right answer here. Well done. Actually, the answer is 1 lakh, but how did you get that? How did you get the figure? Can you give me the correct bifurcation? Yes, the correct answer is D. No, Varad, it's not B. It's D. So what you have to do is opening stock, okay? You add the raw material purchase, that is 90,000 to 17,000. Then expenses incurred on procurement are to be added. So you add 5,000 and then you reduce the closing stock figure of 12,000. And that is how you arrive at the figure of 1 lakh. Okay, are we clear? Absolutely correct. Yeah, that is how you write it. Opening plus purchase plus direct expense minus the closing stock. You've been doing it since class 11, so by now you must be masters at doing this, right? So should I take you to the next one? No, C is not the right answer. It's D. D is the right answer here. I think you've not added 5,000 of the expenses gone into procurement. Okay, I'll take you through the next one. Question number 4. Which of the following concepts is related to the preparation of balance sheet? A, matching principle. This one is very confusing, okay? Let's see who gives me the first right answer. A, matching principle. B, going concern concept. C, full disclosure principle. Or D, accounting period principle. For balance sheet, just reminding you. No. No, I haven't yet got the right answer here. No. No. Yeah, Varad has given me the right answer. Absolutely correct. It's accounting period principle. Okay, accounting period principle. It is because of the accounting period principle that is due to which you close your books of accounts every year. Okay, it states that you have to close your financial statements at least once in a year. So that is why you close your books every year. That is generally around the month of March. Okay, and that is why you prepare your balance sheet. So accounting period principle is the reason behind the preparation of balance sheet. Okay, all right. Okay, I'll take you to the next one. I guess, no, there is one more question to do. Okay, so question number 5, classify the following expenses into capital and revenue expenditure. A, expenses incurred on overhauling of second-hand machinery purchased. What will you classify this under? Will it be a capital expense or a revenue expense? Yeah, that's right. Sahil, that is the right answer. Good. It has to be a capital item because you are doing overhauling of a second-hand machinery. It has to be capitalized. It always has to be capitalized. Okay. Second is registration fee paid for the registration of a firm. Give me the right answer. Second one. Two. No. What is the second item? Is it capital or is it revenue? No, the right answer is revenue. Registration fee that you pay for the registration of a firm it has to be taken to the profit and loss account and not to be capitalized. Okay? Now I'll take you to the next one. That is point number 3, depreciation provided on the fixed asset. This is very, very easy depreciation. You know what you do to depreciation, right? So what is it? Is it capital or is it revenue in nature? Yeah, I think Kotla. That's the right answer. Revenue. Yes. Depreciation that you charge on a fixed asset on a regular basis always has to be taken to the profit and loss account. Okay. It is a charge against the profits of the company, and you take it to the revenue. Obviously, it's a revenue item. It is not to be capitalized. Okay. It is a revenue expense. It's a charge that you take against the profits of the company or your concern or your sole proprietorship, whatever it is. Okay. Point number 4, wages paid on the installation of a machine. Installation, you remember what do you do to the expenses that you incur on installation of any machinery? Absolutely correct. You capitalize such expenses. Okay. Any expense that you incur to get the machinery into working order, right? All such expenses have to be capitalized. They have to be added to the cost of the machine. Absolutely correct. I think this was the last one for this chapter, and we very well managed to finish first chapter in exact 15 minutes, and now I'll be taking you to the next chapter. I think there is one more question that is left to be done. Yeah, there's this one last question that is left to be done, and I really want to see how many of you can answer this one for me. State the principles underlying the preparation of financial statements. Who can give me the right answer? Guys, move on. We moved on to the next question. I want the answer to this one. Okay. All right. I will give you the right answer to this one. I see nobody's giving me the appropriate one. Uh, okay. So, the two principles that you need to take care of while you're preparing the financial statements, first of all, you need to bifurcate between the capital and the revenue items. Okay, you need to clearly know which item relates to which type of expense. Is it capital in nature or is it revenue in nature? Okay, apart from that, um, so capital revenue is one thing, and then accounting period. You have to be careful about which expense or which income has to go to which accounting period, right? You have to follow the matching concept. You have to match the expenses of one particular accounting period with the incomes of that particular accounting period, right? So you have to follow that. So these are mainly the two underlying principles that you follow while you are preparing the financial statements. And now I'm taking you to the next chapter. Okay, if we will be left with any time at the end of the class, we will talk. But for now, I want all of your attention on this mind map. Okay, financial statements of NPO. This used to be a very interesting chapter of class 11. You have the educational institutes covered, right? Then apart from that, you have your receipts and payment account. Okay, you have your receipts and payment account. You have the income and expenditure account. Receipt and payments account is absolutely similar to a cash account, right? It is absolutely similar to cash account, wherein you register the receipts of the year and your payments of the year, right? Yeah, it used to be a very interesting concept. I used to love teaching NPO and equally learn doing it. So then you have your income and expenditure account. Income and expenditure account, guys, I want all of you to focus here. Okay, income and expenditure account was very much in the footsteps of profit and loss account, right? You had various incomes and various expenditures that you had incurred during the year, and you place them under one head, and then you calculate your surplus or whatever. Okay, so what are the main sources of income? You're supposed to know that. Oh god, just a second. I'm so sorry. I forgot to put my phone on silent. I'm so sorry. Okay. So main sources of income. Apart from that, distinction with the receipt and payments account. Okay. Then the method of preparation. The method of preparation is slightly different. I hope you are aware of the major heads, right? The major heads of income and expenses, whatever, because NPOs are slightly different from the rest of the organizations. They have certain other types of incomes, like they have donations, they have legacy, they have other types of things which you do not otherwise find in the usual businesses that we take care of while we're doing accountancy, right? Then you have balance sheet, and under balance sheet, the various treatments you have to take care of over here: life membership fee, then subscription, sale of fixed assets, and the sale of old newspapers. They are very particular, and they require your proper attention before you deal with them. Okay. Yes. Okay, let me read what you're writing. Yes, absolutely correct. Regarding receipts and payment account, it includes all kinds of receipts and all kinds of payments, be it capital in nature or revenue in nature. Okay? All right. Then, apart from that, you have donations, you have endowment fund, then you have entrance fee, legacy, honorarium. Okay, these are some of the other items which are very frequent while you are doing NPOs. Okay, okay, now I'm taking you to the questions. Let's start with question number 1 for NPO. Okay, all right. Question number one, following is not a source of income for non-profit organizations. Which of the following is not a source of income for NPOs? Who can give me the right answer here? This is very simple. Yes, royalties is the right answer. Absolutely correct. Well done. Donations cannot be the answer. Yeah, I'll tell you why. Donations is a very frequent thing that happens under NPOs, right? Donations are very frequent. So donation is definitely a source of income. All right. Then question number two. In non-profit organizations, the excess of total assets over total outside liabilities is known as, tell me the correct answer. What is the excess of total assets over total outside liabilities called? They've clearly mentioned the word outside. Yes, the correct answer is capital fund. Okay. Yes, the correct answer is capital fund. Absolutely correct. Okay. All right. Okay. Let's do, this was simple. This was quite simple. I'll take you to the next question. All right. Capital fund does not include A, amount contributed by the members, B, legacies, C, accumulated surplus, or D, amount received on account of subscriptions. What should be the right answer here? Yes, D is the right answer. Amount that you receive on account of subscriptions does not go to your capital fund. Okay, it is taken to the income and expenditure account, right? It's a revenue item. So D is the right answer. Okay, I'll take it for you. Now I'm taking you to the next question. Okay. Donations raised for specific capital expenditure. Now tell me which of these is right. A, are credited to income and expenditure account. B, are shown as separate fund on liabilities side of balance sheet by crediting to special fund account. C, are not disclosed in the financial statements. Or D, none of the above. Yes, waiting for the right answers. Good. All right, so I'll give you the right answer. Donations that are raised for specific capital expenditure are shown as separate fund on liability side of the balance sheet by crediting to the special fund account. That's the right answer. Okay, because they are specific in nature, hence you take them into special fund account. Are we clear on this one, everybody? Okay, great. Well done. Good. Good participation from your end. You're doing well. Okay. Next one, question number 5. State any two sources of finance for running educational institutions. This is very simple. This is very simple and well done. You guys are doing very well. I see a lot of you giving me correct answers quite regularly, which is good. So now give me the correct answer to this one. Two sources of finance for running any educational institution. This is very simple. Yes, donation and correct fees. Absolutely correct. These are the two most common sources of finance you'd see under educational institutes. Okay. All right. Let's start with the next one, question number 6, and I guess this is the last question that we have for you. Yeah, absolutely. What is the life membership fee and what is its accounting treatment in the books of an NPO? This is quite simple. I'm waiting for the right answers. Yes, correct. It is shown on the liability side, correct. It is to be capitalized, absolutely correct. It is life membership fee, right? Members have to pay it in order to become the member of that particular institution forever and ever. They don't have to pay that again. It's a one time payment and hence it is capitalized, right? Absolutely correct. All of you almost know everything about it. Quite good. No, it's not a revenue receipt, it's a capital item. That is why you take it to the balance sheet. It's a one time payment. Yes. Will you take it to the receipt and payment account? Will you take it to the receipt and payment or not? Tell me this one. Yeah. Yes, you will take it to the receipt and payment account. Okay? Because it is a receipt, right? It is a receipt. Why not? Yes, you will. Receipt and payment account is just like a cash account. Any receipt during the year, you take it to the receipt and payment account. Okay? All right. You remember your concepts, right? Yeah, of course. It has to be in cash, not in kind. Okay. So this was it for today, guys. Well done. I am quite hopeful that I will see a lot of you passing your exam. So all the best for your papers. Do well and download the PPTs and do your revision properly. Do not enter the examination hall without revising your entire book for at least 5 to 6 times. That is the minimum that you require for CA Foundation. Okay? Yes, I'm going now. The time is up. Next class, I think next weekend your classes are postponed for a day or two. Yes, I am a CA. Yes. And I see there's hardly 1.5 minutes left for the class to end. So, is there anything that you want to talk about or you want to hear from me? Next topic is going to be partnership accounts for accountancy. Yeah. Thank you so much, everyone. Thank you and all the best. Do well. Okay. And I will see you very soon again on our next session. Thank you so much. Thank you so much. Okay. Bye. Bye bye. Do well. Okay. Do well. All the best. And I will wait for your good results. All right. Take care. Bye bye.